Hello to everybody. My name is Thomas Steyert. I'm working for an executive agency set up by the European Commission, and I welcome you to today's webinar, part of our Embracing Global Markets webinar series. Today, we will be dealing with doing business in the United States, and we will be looking at a starter guide to US customs and logistics and provide you with an update on tariffs. But before I hand over the floor to Erin, our official network partner in the United States in Texas, I would like to offer you a few more information about what the Enterprise Europe Network is actually offering to businesses around the globe. So we are quite a huge animal, I would say. We have 500 plus partner organizations, business support organizations such as chambers of commerce, innovation agencies, and so forth around the globe, but mostly concentrated in the EU single market or the European Union. We have some 3,000 business advisors and sectoral experts working for the Enterprise Europe Network. They're in daily contact with innovative and growth-oriented businesses in Europe and beyond. And we are currently covering 50 markets, over 50 markets in Europe, and such important places like the United States and important markets such as Singapore, Vietnam, Brazil, and so forth. We are an impact-oriented business support network, so we take very much pride in the impact we generate for our businesses. So every single day, we are actually generating more than 5 business deals on average for our clients. Looking at the type of services we are offering, innovation is one of the main components of the service portfolio of the Enterprise Europe Network. We help companies to sell and buy IP, so technology transfer. We help startups to scale in foreign markets. We help companies to navigate the EU single market and how to do business in the single market. And business partnering services is also a very, very strong pillar or a very important component of our service portfolio for businesses. We are organizing hundreds of business-to-business matchmaking events in Europe at the occasion of major fairs and also in other important markets. We are organizing trade missions, targeted trade missions to other markets as well. And last but not least, I would say, of course, also that we help companies to navigate or take advantage of free trade agreements or any other form of trade arrangements between the European Union and other trade blocs. We also help businesses to get the necessary funding and finance to grow and to innovate and to get investor ready. So this sums up our service portfolio. And if you're a company interested in receiving our services, don't hesitate reaching out to us. But this brings us now to today's webinar on US customs, and you will also get an update on the tariff situation. So Erin, the floor is yours.
Thank you, Thomas. Good morning, United States, and good afternoon in Europe. Welcome to today's webinar, pardon me, hosted in collaboration with the Enterprise Europe Network and the European American Chamber of Commerce, Texas. I'm Erin McKelvey. I'm the president and CEO of the EACC Texas, and I'll be your moderator today. We are thrilled to have a panel of experts in logistics, trade law, and supply chain with us, who will help guide you through the complexities of customs, port choices, and the importance of making good choices when you're considering who to partner with. Before we dive in, I'd like to briefly introduce our speakers. Stefan Boehmer has 25 years experience in financial management, IT, HR procurement, and transformation projects with Siemens. Most recently, Stefan served as Executive Vice President and CFO for Corber Supply Chain North America. Anthony Francis advises businesses on supply chain, digital transformation, and operational strategy, drawing on senior leadership experience across logistics, technology, and international markets. Anthony has deep expertise in omni-channel logistics operations and has worked for such companies as Ernst & Young, Total Oil, Guinness Group in France, and FedEx Logistics, both in the United States and in Europe. Michelle Schultz is the managing partner at Schultz Trade Law. Michelle is an international trade attorney with over 20 years experience in advising global companies on U.S. export controls, sanctions, customs compliance, and cross-border relations and regulations. Most recently, Michelle has given over 25 interviews, both locally and on national television. And at the EACC Texas, we welcome her as our newly inaugurated chairman of the board. So what I really like about this panel is not only the expertise they bring, but that they are all either European born or second generation Europeans. Anthony and Stefan have made the U.S. their home for many years after coming from Europe, and Michelle's father came to the United States from Germany many years ago. So we're thrilled to have them, and I'd like to get started with Michelle on let's have the first slide, please. And welcome her. Michelle's going to do the first portion, and then we'll go on to the others. Welcome, Michelle.
Thank you, Erin, and thank you everyone for having me. Thank you to the European Enterprise Network and the European Commission. It's an honor to be here. I'm speaking to you from Dallas, Texas, and we are the largest exporting state from the United States. Just a little tidbit of information to get us started. I'm going to start with focusing on imports, and I just want to give you basically a general overview of the lay of the land. What is the current landscape? If you have seen the news in the last 6 months or so, you know that everything is up in the air for imports into the United States. And so I will focus on imports and let you know where we are on imports today. Then Anthony will discuss foreign trade zones, inventory controls, and logistics. And finally, Stefan will discuss practical implementation for the companies and how can you save money. That's probably the most important of all. So I want to focus on imports first, just to give you a general background. And that begins with who is Customs and Border Protection. In the United States, when you're doing business in the United States, the one agency that you really need to be aware of is U.S. Customs and Border Protection. CBP is under Homeland Security, and they regulate trade by regulation. The customs regulations are found in the Code of Federal Regulations, and it is the U.S. importer that is responsible for filing correct entries. So whether you are exporting to the U.S. or importing into the U.S., you should be aware that Customs or CBP will be reviewing every entry that they have a chance to review. They do review packages, they review shipments and containers, and they are looking for compliance. Recent history, you've probably heard that in April, the president announced what he called Liberation Day. And these tariffs, these new tariffs, were applied under the International Emergency Economic Powers Act, or IEEPA. The tariffs are higher than we have seen since the 1930s. And these are taxes that U.S. importers must pay on all imports into the United States. He first announced them country by country. 10% for the UK, all the way up to, I saw 49% for Cambodia. Also, steel, aluminum, and copper were subject to special tariffs up to 50%. And we had other specific tariffs that were applied under different regulations. But the ones that started in April are the ones that are really in flux right now. Those are what he calls the reciprocal tariffs, and they apply to every country around the world under IEEPA. In April, of course, as you can expect, 5 small businesses and 12 states filed suit. They sued the U.S. government in the Court of International Trade, saying that these tariffs and any other tariffs, the fentanyl aimed tariffs under the IEEPA were illegal, and they exceeded the authority of the IEEPA because the IEEPA was intended for emergencies. A trade deficit is indeed a problem, and our administration is focused on trade deficits. However, the IEEPA was a law that was created in the 1970s, and it was really intended for wartime, the Cold War, and the Court of International Trade agreed with the plaintiffs and said, this is not exactly what the IEEPA was intended to cover. Already in May, the US government appealed, and the appeals court said, these tariffs can just stay in place while we review. Recently, the appeals court confirmed the CIT decision and agreed that these executive orders issuing tariffs were beyond the scope of what the IEEPA law allowed. IEEPA was intended for national emergencies. It was not intended for unbounded tariffs to be applied to every country in the world for financial reasons. Of course, the US government appealed again. So we are looking at the first week of November, this case will go all the way up to the United States Supreme Court. The US government is hoping that the Supreme Court will agree with the government. So far, what do? We pay and we wait because these tariffs are in place until a decision is made. So we're waiting until November. Keep in mind that even if the Supreme Court sides with US importers and with the US states, there are still means for the current administration to implement tariffs. They still can apply tariffs under what we call Section 301 for unfair trade practices, Section 232 for national security. And theoretically, they could still use the IEEPA if they narrow their scope, possibly. So I don't really anticipate that tariffs are gone forever, but I think there is a chance the Supreme Court might agree with the lower courts. The EU in particular has suffered from US tariffs on imports into the United States because the baseline is 15% under the recent agreement. There's also a 50% tariff on steel from Europe and aluminum, and there will be a reduction on autos, but automobiles still will be at 15%. So these tariffs are higher than we've seen in years and years, and it's the US importer that has to pay. So someone is going to end up passing this cost down to the consumer. And that's what we're actually beginning to see here on the ground and with our clients. Recently, July 30th, the exception for small packages was eliminated completely. There used to be a loophole where small packages could enter the US, and if they were $800 or less in value per line item, then you didn't have to file a formal customs entry, and the importer did not have to pay duties. This changed under the current administration, and now there is an automated commercial environment, which we call ACE, and it will reject requests for entry if the proper duties are not paid, even on the smallest shipment. There's no minimum. Formal entries are now required, even for the smallest shipments. This is going to be difficult. Customs decided that there were certain carriers that were pre-approved to collect these duties and to determine these duties. And there's a list of those carriers on the Customs website. But in the meantime, national postal services around the globe have stopped shipping through e-commerce, issuing notices such as there are going to be shipping disruptions. Etsy is one website that we use a lot where we can buy gifts for people and handmade items. They announced that they're no longer purchasing goods from Australia Post, Canada Post, or the UK Royal Mail because it is too complicated and those postal systems are not equipped or willing to handle the situation.
Michelle, could you change your display settings, please, again?
Yes. Can you see my slides?
We see the next slide as well. So if you swap presenter view and slideshow, it should work.
Thank you so much. I appreciate that very much. Okay, so I swapped the views. What's happening? I had to show you this picture because
Okay.
I ordered. Is this okay? Can you see it? The common complaints, whoops, common complaints slide.
We can see it, but we see your next slide as well. Just continue.
I'm so sorry.
That's okay.
Okay. Okay. Well, I had to show you this picture because this was an actual transaction. I like to buy skin products from South Korea. They make great skin products. And I bought this skin product recently. And for the first time in a purchase, I noticed this itemized tariff surcharge. Interestingly, it says 14 cents. That is not the current amount for tariffs on Korea. So I'm not sure how they're itemizing this. There's also a line for taxes. And the current tax is closer to 15%. So we're really looking at tallying up the taxes and the tariff surcharge. I have heard that some online companies have wanted to itemize tariffs, but they were discouraged to do so. And so you may buy online and find that you're not quite sure which part is the tariffs or if the tariffs will be applied later. So what we're seeing in everyday life is contract terms changing. Customs is sending out insufficient bond notices if importers and carriers don't have enough insurance to cover the new duty rates, which are higher. We've seen some delays, some seizures, and your receipts may start to look different or not, but be ready because no one knows exactly what to expect at this time. What are companies doing? And I'm sorry, you're seeing both my slides at the same time, but companies, in my experience, are rethinking everything. They're reevaluating where they're sourcing from. For example, India has a 50% tariff rate. India has been a friendly trading partner for us for many, many years. And we are now talking to Indian companies and those who source from India about what to do. Some companies will move manufacturing. Some are double checking that their customs values are correct because duties are paid based on a percentage of the value. And finally, some companies are looking at special programs, exceptions, or maybe even different raw materials. What we can expect next is that the president has threatened to issue tariffs on both furniture and pharmaceuticals, and those tariffs could be up to 250% on imports into the US. This makes me think of clients who are businesses that have to outfit entire buildings, construction companies. This is all changing, and we're hearing in the construction world that they are starting to feel it here in the US. The US Supreme Court will hear the IEEPA case in November, and fingers crossed, if the importers win, importers might be able to claim refunds, and we don't know what that process will be. We will have to wait and see what the Supreme Court decides. So keep your eyes and ears open. This is a wait and see mode, and we understand it's a very difficult time to navigate doing business with the US.
All right, thank you, Michelle. That was not only informative, but pardon me. I think it's really important to understand what's going on in the market as it changes daily and has been exasperating for many people. But what are you going to do if you are a company that has strategically been looking at the United States for a long time. And you want to know, well, okay, all of that is well and good. It's going to keep changing. We're ready to go. We really want to do this. And what are some of the things that need to be considered if you're looking at the US market? And Anthony, we're going to go on with you about the financial and operational benefits and missteps and possibilities that can happen for companies coming into the market. And hopefully our next two presenters are going to give you some information that will really give you some operational and strategic insight going forward. So Anthony, I'll take it over to you. Maybe Michelle, you can find the toggle for the full screen there.
Yes, I'm going to work on the full screen and try to get this better.
So the next two slides we have here, this one, financial operational benefits, and you can see the other one, strategic and competitive benefits, talk about foreign trade zones, or we call those FTZs. For those of you in Europe, and good afternoon to you, it's very much like bonded warehouses, which is a term that we've used, especially in the UK, for a number of years. But essentially, it allows you to put goods into storage inside a zone and not pay taxes on those until you actually remove them from that zone. Dallas, where we all are, all four of us here on the team are from Dallas, is actually, we call it Dallas-Fort Worth. We have two cities here, Dallas and Fort Worth. Each one has a separate foreign trade zone administration. So when you set one up, you're setting it up under either the Dallas area or the Fort Worth area. But it covers the whole of the North, what we call North Texas area. And these zones, these are not like customs run. They can be customs run facilities, but you actually can have your own warehouse designated as a foreign trade zone. And indeed, if your warehouse and your computer systems, your warehouse management systems, and inventory management systems allow you to identify slots in racking, you can say that is a foreign trade zone area, and report to customs at any time what is considered to be inside your foreign trade zone. And that's very useful for a company because they don't have to move product each time from place to place. You just redesignate an area as a foreign trade zone. So I'll cover three big points here on the first slide, and then we'll move to the second one. First one is duty deferral. Obviously, as you bring it in, you don't pay for until you actually take those out. So the fourth point here, which is cash flow improvement, that obviously means that you're not shelling out your hard-earned cash until you actually need to pull those products out and pay duty at that time. I'll let Stefan will probably come back on the next of the points on duty elimination and reduction, because he is very specialized in that particular area. But one of the other areas is inventory tax savings. Most companies in Texas and around the states pay property taxes or an annual tax based on the amount of inventory that they carry. The inventories that are inside an FTZ are tax-free at that time. And in fact, they're not considered to be in the United States at that time. So they're not subject to property taxes. So that's another important savings that you have on those. Let's move to the next slide on the strategic and competitive benefits. And I'll highlight too, you'll have copies of these slides. You can read these at your leisure. But supply chain flexibility, of course, it does allow you to bring product in. It goes straight through. You don't have to do all the customs filings at that time so it can come straight into your foreign trade zone, and then you can worry about doing all the paperwork, etc., before you pull those out. And in some cases, Michelle was talking about how important it is to have the harmonized tariff code on products. If you don't want to have fines later on, it allows you to, in fact, gives you a little extra time, if you like, to get those products sorted out. And then another important area is inside a foreign trade zone, you can actually do manufacturing. And that's a really important thing. You can bring product in from multiple areas, do the manufacturing, and in fact, you could re-export those from the foreign trade zone, and they are completely tax-free at that particular time. So that's another of these. Michelle, myself, and Stefan we're all we're consultants essentially to the business world. We have deep experience in how to manage and set up foreign trade zones. So we're well welcomed for questions from any of you on how to do that at appropriate times. And I'll now pass on to Stefan.
Excellent. Thank you, Anthony. Good morning, good afternoon. Could we please move to the next slide? That looks good. In the US, you have three major taxes: income tax, sales and use tax, and property tax. Many people don't consider property tax. In our business, property tax was 1% of our inventory value, which can be really huge. Property tax depends on the jurisdiction, and most jurisdictions have property tax on inventory. There are some exceptions. The rates and rules vary. You have to compare the USA with Europe. Europe has many countries. The US has many states. Every state is different. If you have free port exemptions or foreign trade zones, you can avoid property tax payments. Anthony mentioned the foreign trade zones. Foreign trade zones have no property tax, but you are limited where the foreign trade zone is. It's very specific. We have two in the Dallas-Fort Worth area. If you don't want to go to a foreign trade zones, we have free port exemptions. And most states have that regulated. In Texas, it's allowed, and each city, each county can decide if they allow it to their companies. In our case, the free port exemption is allowed, and it means that we can get reduced property tax on anything we export from Texas. There are some limitations, like it has to go out within 175 days, but it's a good way to reduce property tax. Having said that, it means the location you choose is very critical for your tax base. And for that, you really need an advisor, expert, like Michelle, like anybody, who can help you, guide you through the different jurisdictions, different benefits requirements. Can we move to the next slide, please? The next fun topic is HTS codes, Harmonized Tariff Schedule. US Customs uses this code to define the duty rate. The code can be different whether you import parts or sub-assemblies, which means it might make sense to do sub-assembly somewhere else and import semi-finished goods. The code is also important for application of free trade zone agreements, free trade agreements like with Mexico. And it's part of duty management. If you choose the right HTS code, you pay less duties. Often you can use different HTS codes for the same part, depending how you classify it. The challenge is customs can override your HTS codes. It can delay entry, and it can issue penalties. Customs has every part imported in the United States, and they go into their records to check with the past what HTS codes were applied. So that's a huge database. As importer of records, we get a download I believe every week, every 2 weeks of every part we import. The duty rate which was applied, the code which was levered, the country it came from, everything is visible. If you look into the business world, in the meantime, you have AI tools helping you with HTS codes. If you want to fine tune in detail, there are different good tools out there, or again, a consultant, a partner who can help you set it up properly. I think that's all what I had. Is there something else, Michelle?
Yes, I did want to add that with HTS codes, it's really important that you follow the general rules of interpretation, which are in the very beginning of the tariff code. We have had a lot of companies that prefer one code over another, and so they may pick the one they prefer. But keep in mind, if customs thinks that you should have chosen a different code, you could end up with delays or penalties. And we do see that from time to time where a company has not classified exactly the way the rules tell them to classify. So that's an important thing to keep in mind. Depending how it's classified, I think you were going to say that you could have more than one. And so you may want to look at customs rulings.
Yes. I mean,
Customs
that's all where you can leverage a tool or the experts, because that's new for most European companies, but it derives a significant amount of cost.
I think it's really important not to make decisions on your own if you are not used to exporting and don't have a lot of expertise. That it's choosing your partners is incredibly important. Stefan, as far as choosing partners, you've been through this with multiple companies. How do you choose who you use for logistics or port entry, or what are some of those considerations?
I mean, we have a selected importer of records with whom we work closely together. But then when you set up something new, you need advisors. I mean, we are considering changing our location, expanding. That's always done with advisors because the rules are too specific. There's way too much to consider for regular business, even if you're a US business.
That's right. And that's why some of these trade agreements take years to put into place, because there are so many line items to discover. And I think Michelle even has in-house experts on all of those things. So it can be daunting.
If I could say one thing.
Sure.
Most people obviously use a freight forwarder to manage the process of bringing product in. Just remember the freight forwarder, if the freight forwarder is code for you, that's still your problem. They, as the importer record, the one who's responsible for that. And the Encode terms that you have, we don't talk about Encode terms, but they are important, is how you designate whether it's duty paid works. And those, and freight forwarders, if they can't, sometimes they will just to expedite the process of removing. And that's very dangerous. If they don't consult you first of all, saying, do you?
And that's something what we saw, Tony. I mean, we had suppliers sending goods without HTS code. Then somebody makes an estimate. Estimates are never good. We had suppliers sending goods with the wrong HTS code, and suddenly we had a steel tariff on it. And that's the things you have to work with. For that, you really need to get the download from your imports to understand what was charged and how can you work on it.
And Michelle, you actually get involved after the event, having to go back and represent customers who've been hit by big fines.
All right.
That is correct. Yes. So what we have is customers calling us because their goods have been seized indefinitely, and customs will charge interest while they store the goods that they have seized. This can even happen with small packages now. And they can issue penalties. So if customs believes that there was fraud, for example, there's a huge focus now on what they call transshipment, shipping through various countries to try to make it look like the country of origin was not what it was for tariff purposes. They consider that to be unlawful, and they will penalize up to the value of the merchandise or multiples of the duties owed. We have handled penalties in the past year, mostly in the range of $3 million, which can be devastating to a company, especially small to medium companies. They are paying very close attention to these things. And we come in, our law firm comes in and negotiates with customs. We have contacts at the ports, and we know how to work with them to resolve issues without litigation in the vast majority of cases.
I mean, you also need experts when you want to apply for the rebate. In theory, you can apply for a customs duty rebate if you export goods again. So you pay the duties when you import to the US, and you can apply for the rebate if you export, for example, to serve Canada or Mexico. On paper, that process is clear. In reality, the US government is very reluctant to give money back. So it's a very time-consuming process, and also it makes sense to have expert help because it's not normal business. And I see too many businesses who don't leverage that because for them it's too much work.
That's a great point, Stefan, because a lot of companies will tell me, oh, my freight forwarder handles that, my broker handles that. Everyone should be aware they may be handling it for you, but it is the importer of record, the US company that is conducting the import and receiving the goods. That's who is primarily liable. So we actually see a lot of mistakes when companies are hands off. It's good to be hands on and know what your agents are doing on your behalf.
Yeah, yeah. Did Stefan finish his slides? Oh, there we go.
He did talk about Freeport exemptions, and I
Yes.
don't know if we still want to come back to that one, or basically you're looking at reducing tax liability.
Yes.
So would you use an expert for this, Stefan?
We had our experts in-house, and then we use third party when needed, but we were bigger. I mean, if you start smaller, you definitely need help.
And how do you find the right help for something like Freeport exemptions?
I mean, first, it's part of the right location selection because it doesn't apply everywhere. And then secondly, you have to create your paperwork in the right way to file for that exemption. So you have to set up your system from the beginning to be able to track it.
Okay, so the right software systems are very important, keeping track of those, and having great relationships and close relationships with the people that you're working with on both sides of the Atlantic is extremely important. I think that maybe in this day and age of Amazon shipping, let's talk about that for a moment. Shipping things into the United States, and okay, you have a great product, you have an agricultural product, you have the best sauce in Greece, and Amazon wants to take it on, or Cisco wants to put it on their marketplace. Can't you just hand that over to them and ship and think that everything's going to be okay? Or what do you need to know in those circumstances? Does anybody know?
Well,
Or is that another webinar?
Yeah, I think it could be, but the e-commerce world is about to be upended, and I've been telling people, be ready for this, because these cheap shipments from Shein and Temu, and my daughter ordered a dress from Australia that was $60, and now I'm looking at 140. This whole thing is going to be upended, and it is ultimately the importer who pays. So Amazon, I don't know that if they act as the importer of record, they're going to pass that cost to their customers one way or another. Right? I mean, Stefan, do you agree?
I also believe with the smaller packages, in many cases, the shipping company has to pay the duties and charge the end customer. So in the end, the cost ends up with you. And that's a big unknown, because I don't know, do I pay a certain percentage? Do I pay $100 flat for a package? There's a lot of unknown right now.
Anyone like DHL, FedEx, UPS, who have their own internal freight forwarder operations. So FedEx clears customs and then bills the customer afterwards for the duties and taxes. Is that is critical. Problem is now with getting rid of the de minimis of 800, all of those items now have to be cleared. So they can't put those into delivery until they've technically come out of customs. So those three companies, DHL was a big operator of de minimis shipments. USPS, I don't today to deal with that customs clearance for each of those shipments. I mean, this was literally, I think someone told me it was 1.1 billion shipments last year came in through on the de minimis amount. That's a huge amount of missed duties if you look at it from a national point of view, but you look at it from a processing point of view, it's horrific. And as to your point, Michelle, it's going to upend the whole e-commerce, and especially for the e-commerce. And
it's not just e-commerce, because, for example, if you ship spare parts out of Europe, it will take longer time now because it goes through customs. In the past, it was just going through below $800. In the meantime, it goes through customs. It's delayed in processing. There's a time factor on it too. It's not just the monetary amount.
Yeah, those delays can be expensive. Sorry, Erin.
What happens, let me ask this question. What happens if you ship something and you're shipping by sea? What happens if the tariffs change in the middle of the process? So your goods are out in the middle of the ocean and suddenly tariffs change. What do you do? Does that affect you, or how does that work?
The tariffs in place at customs clearing are the tariffs you pay. I mean, that was a big challenge in the past when Chinese tariffs were increased. You try to get everything in after or before the tariffs were increased. Once they were reduced, you try to push out your shipments to get the reduced tariffs. But always a tariff in place at the time when you clear customs. And
so,
that's
Michelle,
why,
question for you there. On if it's X works, obviously the customs clearance is done at the port of entry in the US. If it's D, which duty paid, is that considered the trigger point for the rate?
No. In all cases, it's when customs is cleared. Incoterms only define who pays for the duties. And with DTU, the exporter pays. With all other Incoterms, the importer pays.
Okay, good.
Right. The way I look at it, the Incoterms are contractual agreements among the parties, and the Incoterms can be whatever you want. The exporter clears customs, the exporter pays the duties. But that's different from the regulatory requirements, which always hold the importer liable. So I do have clients that say, wait, but it's DDP. We have DDP. Yes, you have agreed DDP with your business partner, but it doesn't absolve you of customs liability, unfortunately. So it's again good to have your eyes on what's going on. Don't just hand it to your agent. Do it without keeping track.
I mean,
Right.
that's a part of the contractual regulations with suppliers and customers to minimize your risk. How
Mhm.
can you
Mhm.
pass on risks? How can you get suppliers or customers covering part of your expenses?
That is very interesting, and I'll give my case in point that I recently ordered this summer a pair of shoes that I thought were coming from Germany because they were no longer Geox. It's a well-known brand, no longer selling in the United States. And I thought they were coming from Germany through Amazon, and the shipment just kept getting delayed and delayed and delayed and delayed. Kept getting notices that it's going to be coming, by the end of the week, by next week. So finally, I went and looked at the tracking information. So even as a consumer, you need to be aware. Looked at the tracking information and saw that it originally left Australia, had cleared customs, but never made it to me. So I had to go back to Amazon and say, I don't know where my package is, but I think I need my money back, which probably saved me a lot of money. So this is really affecting a lot of people, especially if you like nice shoes. But let's go on from there. So what are we looking at in the future? And if we have any questions in chat, please add them there so we can get to them. And let's see if I can, not sure I can see where the chat is. I see some
There are no
things.
questions in the chat.
Okay. So if anybody has questions, please add them to chat. I think there is an incredible amount of information and good information that we went over here today. The most important thing to understand is in this era and time of uncertainty and risk, it comes back to supply chains. And we've been hearing a lot lately about supply chains and how do you minimize risk. You want to take that, Stefan? Some of the things that companies can do to, we saw during COVID that so many supply chains were disrupted. And from speaking to people, a lot of those, pardon me, a lot of those supply chain disruptions, companies have learned to pivot and find additional sourcing. So what do you think they should be doing and looking at now?
I mean, in general, you don't change your long-term strategy due to short-term events. I mean, you don't change your location because of current tariffs. Nevertheless, you have to understand and mitigate your risk. So, for example, with duties from certain countries, yes, it makes sense to reevaluate. Do you want to minimize the procurement volume? What is my break-even rate? How much duties can I afford before I find it cheaper somewhere else? I mean, we are not going to China because we love the Chinese products. We're going to China because it's cheaper. And as long as it's still cheaper with tariffs, it might make sense to continue procuring there.
Right.
It also makes sense to understand the free trade zone agreements with Mexico and Canada and see what we can leverage. Because if you assemble in Mexico and import Mexican products under the free trade agreement, you don't pay duties. So there's a lot of things you can look at, but it's more midterm to long term. Short term, it's really understanding your value flow, understanding day-to-day HTS codes, incoming goods, trying to speed up or delay depending on pending tariffs. The nice thing is tariff changes are normally announced. It's also to understand what you can pass on to suppliers and to customers. Can you quote to customers a price outside of duties and say you charge the current duty rate extra? Can you get suppliers on board to share the pain? I mean, many suppliers raised the prices. We saw price increases 5 to 10%. you can go back and question it. Is it really tariff? Where's the tariff impact? And not across the board price increases. It's a lot of day-to-day work. But that's the time we see. That's where we are in here. And yeah, long term, I think that will settle. Long term, we will get a more stable ground. If we look at that next year, we will know the duty rates. And then you can plan. Right now, it's the uncertainty.
Well, any last words or pieces of advice, Michelle and Anthony?
I think one area also, and Stefan, very good points there on the how to avert risk, is the geopolitical situation that you have around the different countries. And one of the, I'll just give an example. In the Horn of Africa, which is around Aden, there is all the issues currently with pirates and others. And traffic through the Suez Canal has gone down 64% over the last 2 years. And that has required rerouting ships all the way as they're coming through, coming out of Asia. They then go straight down around South Africa, up into Europe or into the Mediterranean. That's 2 to and about 1 million ship.
Okay. Anthony, I think we just lost you.
Anthony, but I mean, from a supply chain point of view, we are used to deal with surprises. We had COVID, we had container shortage, we had Suez, Panama Canal was at some point something. So it's never a year without anything. And so for resilient supply chains, the question is, how can you set yourself up to deal the best with these challenges? And the best is really to understand your flow of goods and your value flow. You need to go into the detail. You need to understand what routes they take. Where's your risk? Where's your exposure? How is the cost put it together? Because that's where you lose your money and your time.
Can you hear me now?
Yes.
Yes.
Ah, good. Well, what I said was extremely interesting. I hope you heard some of it at least.
We did hear some of it.
Good. Very good.
So what do we expect going forward, Michelle? Any thoughts? You've done so many interviews since all of this started, and I'm sure you never expected to be spend so much time talking about these points, but are you getting any insight as to, if you're thinking about exporting to the United States or starting a subsidiary in Texas, which is possibly a good idea to minimize your risks in the long term and do some of your at least partial manufacturing here. What are your thoughts on long term as far as legality goes? Do you think this is going to be sticking around for a while?
I do. From the conversations that I've had, and just based on my experience with trade negotiations and free trade agreements, and I was present, not a party to the agreement, but present during the USMCA negotiations in Washington. And these agreements take so much time. So it's interesting that what we have now, in most cases, is not a fully developed agreement, but a letter that the president has sent. And these letters give you minimal guidance. The tariff is 15%, done. This is not going to be a 200-page document that tells you how to navigate that or the rules of origin. Yeah. So I think that unwinding some of these broad statements that have been made and broad requirements will take time. And I don't know what the Supreme Court will decide. Many people say that the Supreme Court is so supportive of the current administration that they may keep these tariffs in place, in which case it will be even longer. Mm-hmm. critical to pay attention to your compliance. Make sure you don't make any misstatements, because the Department of Justice has started a whole initiative just focused on customs and making sure that duties are collected. And if someone does not report correctly, they want to catch it. So bottom line, I think this is here to stay. And if you have not looked at your compliance program, now is the time to take a look at it and consult with experts like Stefan Antony and my firm about, what do I need to be doing for compliance? Because I don't think it's going away fast.
Michelle, oh, sorry.
Go
Can you
ahead.
maybe comment quickly on country of origin? I think there's
Yes.
still a confusion.
Oh my goodness. Yes. And I've seen some customs guidance recently reinforcing that the country of origin is not the same thing as the country of export. The country of origin is where the product was made. So earlier I mentioned customs is very concerned about transshipment, illegal transshipment. What's happening is, for example, I might import from Mexico under the US-Mexico-Canada Free Trade Agreement, and I might claim duty savings. Come to find out that the inputs into that product, let's say it's shoes, the inputs came from China. And that could be considered not Mexican origin, but Chinese origin, depending on where the bulk of the manufacturing occurred. The government is going after this in a way with the negotiations. I have read that even Mexico is now going to be charging higher tariffs on items from China, exactly because the US has negotiated this and has noticed that a lot of times people are putting the country of export, but they're not putting the country of origin. And the tariff is applied based on country of origin.
Right.
That's a great point, Stefan.
And there are very specific rules how you can change country of origin, how much you have to manufacture locally to be able to claim made in Mexico.
Yes, and that can also change based on your tariff code.
Yeah.
So if you have to have what they call a substantial transformation, or do you have to have regional value content? Those rules change also, depending on what tariff code you choose. So now's the time. Make sure your tariff codes are right. And if you need to change your supply chain or change your production, now's the time to start looking at it.
Thank you all. I'm going to go ahead and thank everyone, because we have one more presenter. And so I'm going to give our thanks and send it over to them. We have had a very informative panel session today. I'd like to thank Michelle, Anthony, Stefan, and Thomas, of course, for their time and information. Clearly, there are many, many more topics in customs and transportation and logistics that could probably we could probably cover in 5 or 6 webinars. It is a lot of information. We just tried to give you some good information here today to help you make decisions going forward. And our goal as a Chamber of Commerce is to make sure that companies who are coming into the United States from Europe are doing so in the best possible way that they can, with people that we know, people who are experts, and people that will guide them to make correct decisions. So that is, we see a lot of unfortunate decisions from companies, and the goal of the Enterprise Europe Network and the Chambers of Commerce who help them is to help you avoid those. So thank you, everyone, for attending today's webinar, and thank you for your support in all that we do at the European American Chamber of Commerce in Texas. I would like to say that we do have partners, 5 chambers in the United States and 3 in Europe. And we work very closely on these webinars, specifically with our New York and Carolinas chapters. So if you're thinking about those areas, please reach out to your European American Chamber of Commerce there to help you. So right now, I'd like to pass it over to Christos Skouros. He is a policy officer at the European Commission in DG GROW, and he will offer final remarks on behalf of the European Commission, which is certainly a very important and key partner in these series of webinars. Christos?
Thank you very much, Erin. I'm Christos, the Directorate General for Internal Market, Industry, Entrepreneurship and SMEs at the European Commission. I would like to thank you all for joining us today, and it's a very crucial topic what we discussed, and a very, a key discussion across the world. I truly found it very useful to receive information from experts from the US. It comes at a very timely moment because yesterday our President, Ursula von der Leyen, she delivered her State of the European Union address in the European Parliament. This is a speech that the President delivers annually, kind of outlining the tone and to set the scene and the vision and the priorities for the EU for the year to come. So as you can imagine, this was one of the topics that she touched upon, one of the key topics, to be honest. And she characterized this, the so-called framework agreement of this all-inclusive 15% tariff ceiling, as the best deal possible. In this global volatility, which kind of maintains stability and creates some more predictable conditions for the European companies and also for consumers, because as the speakers also mentioned earlier, the end user, the consumer, is going to be the one to be the most affected by those changes. It's needless to highlight the significance of the transatlantic relations for the European businesses, and this joint statement comes at the moment to kind of reflect shared commitment and determination, and not to disrupt further the very important economic relations we have with the US. I don't want to keep more time on this. You were the experts, and it was very nice to hear from you, your insights. I would like to extend our thanks also to the speakers for their time, to Erin for moderating the session, and to my colleagues in ASME, the agency. Please stay tuned with the rest of the webinars that we're planning for the future. You can see them already through our website. And I'm also very excited to announce that we finally have an official LinkedIn page. I can share in the chat our LinkedIn profile of the Enterprise Europe Network, so that you can see our activities in a more, user-friendly atmosphere. A quick reminder also for our participants that all these 1-hour webinars are live streamed on the EN website, so you can always see them later, share also to maximize outreach, etc. Thank you once again, and I wish you a pleasant rest of the day, and the word is back to you, Erin.
Thank you, Christos. So that concludes our session today. Thank everyone for participating, for being here, for listening, and we look forward. Believe we have several more upcoming webinars this fall. So stay tuned for those, and keep an eye on the Enterprise Europe Network LinkedIn page and the website, as well as our own websites. So I will go ahead and say goodbye. Appreciate your attention, and please don't hesitate to reach out if we can help you in any way. Thank you.
Thank you very much.
Thank you.
Thank you.